Hello everyone, this is Nico NQ. We're back with another Year of the YouTube video. Today we're going to be going over fair value gaps. As you all know, if you are already an ICT trader, or if you're already familiar with ICT, or if you've never even heard of ICT, fair value gaps are basically an imbalance in price action. And as you know, the market moves from imbalance to balance. As price is making an imbalance, it's going to want to balance out, and it's going to go back to imbalances, and what we call those imbalances are fair value gaps. People may call them buy side imbalances, buy side, sell side imbalances. You can call them whatever, but at the end of the day, the same thing. In fair value gap is a very well known term. So as we get into it, we're going to be looking into fair value gaps and how to identify them. So you're looking in the market and you're seeing a bunch of these candles, right? And if you're a beginner, this is also very easy to spot out and learn if you're a beginner. And if you're experienced, intermediate, and you just want to know how to be able to spot them out better, how to be able to use them, that also works too. Okay, fair value gaps. Fair value gaps is essentially three candles, right? So three candles, and there's a gap in between each one of them, right? So this right here would be your gap. This right here would be your gap, right? Same thing if we're selling off, right? We have here, here, and we have here. What do we have here? A fair value gap. This would actually be a bearish fair value gap because we're going down, where price is potentially going to go up and then come back down, right? Same thing here. Price will come up, come down, rebalance, and continue going up, right? Let's try to go find those examples in the real life market. As you can see here, there is plenty of them, right? We have, this is a fair value gap, right? Because we have 1, 2, 3. We have 3 candles, and there's a gap in between them. And as you can see, price rejects off of it and shoots up, right? Here's another one. Price still respects this one, but this one respects it, goes up, right? Let's find another one. Fair value gap here. Bearish fair value gap right here, right? Respects it, comes down, ends up not respecting it, but fair value gap here. And yes, this is technically still a fair value gap because there is still a gap in between these candles, right? Okay. So now that you know what a fair value gap is a candlestick, a 3 candlestick pattern that has, and it doesn't matter if the candle is bullish or bearish, as long as there's a gap, it's still a fair value gap. Let's try to find an example of one that, let's see. This right here. This is a fair value gap right here. We have a bullish candle, but then we have a bearish candle, but then a bullish candle, right? They're not the same, but there's still a gap, and there's the gap. And it gets disrespected, but ends up going down, right? This right here is still a fair value gap, even if the candles aren't the same, right? As long as there's a gap. So we gotta think, a gap. Look, gap, right? Okay. Now we know what fair value gaps are. Now, how do we identify which ones are going to work, right? Now, price, essentially there's this technical analysis called premiums and discounts, right? You can set out your Fibonacci tool, right? Set out your Fibonacci tool, and you can use these levels in your Fibonacci tool to identify premium and discounts and match them up with fair value gaps to see which one would work the best, right? We mark them our swing low to our swing high, or our swing low to our swing high, right? So if I mark this at our swing low to our swing high, see a fair value gap that's near this area. We want to see this area with a fair value gap between the 0.705 to the 0.79. So we have this big fair value gap here, right? And we also have this fair value gap down here. Now, I would essentially use this fair value gap because this one is just has all the levels in it, but essentially I would use this fair value gap, and you can technically enter off that, put your stop loss at the low, right? Target buy side liquidity, that's up here, put this like your break even, and boom, you can trade that off a fair value gap. You would have hit a 4 RR, right? So if you want to copy these settings, go ahead and here, take a second and pause the video. Okay, hopefully you got that. Just you just mark them at the highs and the lows and stuff like that here. I'll do one for let's see, I'll do one for sell side too. Right, so we got our swing high to our swing low, and let's see if we have a fair value gap lining up here. So we do. And where did I say that we want our zone to be? We want our zone to be in here. So as price enters, you can go here. You can put it at either one of these swing highs, and you put it at this low, and you would have got a 1.61 RR, or you could have put it at this high right here and could have got a 2.4 RR. Either or would have worked out in your favor. All these in sessions too, so they all work. It's just a simple strategy for people that they can use to start getting into trading. Nothing too hard, nothing too advanced. But essentially, yeah, that is what you would do. That is an example. Fair value gaps. But yeah, we'll do one more example. Swing low, swing high. Do we have a fair value gap in either one of these zones? No, we do not. But price does reject off the discount. But no, it does not. Okay, let's find another one. Let's go to a session. Swing high or swing low to swing high. Price doesn't come back down, so no trade would have been off there. Let's try to find an example that I have not to use. Okay, swing high to swing low. We're looking for this area right here. Is there any fair value gaps? No. But you're looking for that area. There is a fair value gap here. You can enter off that zone right there that you got from the Fibonacci. Place at the swing high. And you can target Asia lows. Right. And you would have got a 6.4. Right. So it's not too hard of a strategy. It's something that you can learn pretty easily. Just try it out. Test it on TradingView or whatever app that you use to chart on. Try it out. Back test it. Let me know in the comment section if it's a good strategy or not. It's pretty simple. It's nothing too difficult. I will be releasing more videos on other Confluence and stuff like that. But that's a fair value gap right there for you guys. Fair value gaps. Bearish fair value gap, bullish fair value gaps. But there you have it. Hope you guys have a good rest of your day. Good luck with your trading week. If it's the weekend and you're watching this, hopefully you're back testing. If not, good luck next week. Have a good one, guys.